Hi there, it's Budget Boxing Day. I wanted to get into your inbox so you had the relevant tidbits. This is our initial assessment. Obviously, these things are quite big and dense, so if there's anything major from here on out, we'll certainly be in touch to let you know. But last night, Jim Chalmers delivered, I believe, his first budget, and we just wanted to make sure that you had the key areas in your inbox nice and early today. So, firstly, this budget was more about tackling housing and cost of living issues. Whether the policies are good or going to work, that's for time to tell. But we just wanted to give you an initial assessment around some key things around superannuation, tax from a personal and business perspective, the cost of living, and the housing measures. So first and foremost, with regards to superannuation, if you are in retirement phase of super, so you have an account-based pension and you're taking an income from it, if that income is the minimum, over the past couple of years with COVID being in place, the minimum was halved to help with maintaining people's account balances. There's been no talk in this budget about maintaining that next year. They've been doing this year on year. So unless something changes in the next 6 weeks or so, anyone getting the minimum payment from their account-based pension can expect that to double. And basically, in addition, the timing of your super guarantee payments was the next thing outlined. So at the moment, when your employer pays your super guarantee payment, generally they will pay that quarterly. And the proposal from 1 July 2026, and the long lead in, is to allow people to businesses the opportunity to get organised for this. Basically, they just bring that into line with when your pay cycle is. And then the third point was around the $3 million total super balance tax. A bit of a tongue twister. So basically, this one was mooted back in February. If your super balance is above $3 million, anything above that balance, you will have to pay 30% tax on instead of the 15% below. The one thing I would like to see with this one is that get indexed with inflation every few years. So in 25 years, we don't have a whole stream of people caught up in this issue. The next around personal tax cuts. So again, this one was more about what wasn't said. So this is this third stage of some tax cuts from a little while ago. What you can see and proposed to take effect from next financial year. What you can see on the left-hand side here is the current marginal tax rates and the proposed ones under the stage 3 tax cuts. So what you can see is this whole middle section from 45 all the way up to $200,000 is getting spread out and flattened out at 30%. And over on the right here, you can see that based on your taxable income, these are the estimated tax savings on the left-hand side per person. So effectively, the estimated tax saving really ratchets up the closer you get to that $200,000 threshold. This doesn't include the Medicare levy, and basically, if you're below $45,000, there's no change to your situation. From a business perspective, is around the instant asset write-off, so increasing the amount that you can write off. So if you purchase something and it's installed and ready to use from 1 July to 30 June next financial year, you can then essentially write the whole value of that purchase off as a tax deduction. With any tax deduction, it doesn't make sense to go and buy something unless it was a planned expense, because you don't get the full value of that expense back. You only get to deduct it against your tax. So essentially, if it's a planned expense, this is really good. If not, not so good. Don't go and just spend money for the sake of it. In addition, this is a temporary measure, so at this stage only looking to be in force for next year. And this is also on a per asset basis, so you can buy multiple things up to $20,000 and deduct that. From a cost of living perspective, so if you're on any of these eligible households, so you're on a healthcare card, low income healthcare card, a gold card, Commonwealth Seniors healthcare card, family tax A or B, or a carer's allowance, amongst other things, you can receive, or you will receive, proposed a $500 per annum energy relief payment, and a small business might get up to $650. Now, this is to help with the cost of rising energy prices. And the second one was around the work bonus. So if you're an age pensioner and you're presently working, last December you would have got a $4,000 credit to your work bonus account, taking that up to $11,800 that you can earn before it affects your pension. That's certainly helpful with cash flow and so forth for certain people. And then the last stuff is around housing. So this scheme's actually run by the National Home Finance and Investment Corporation, but basically it is an expansion of this scheme. So what it does is, historically, if you had a really low deposit and you went and purchased a property, say it was only 5% of the purchase price, and the bank would make you pay something called lender's mortgage insurance, which could be tens of thousands of dollars in insurance that you have to pay. So basically, the government is proposing to guarantee certain people, eligible people, so that they don't have to pay this LMI and they can save on this. And the expansion of it is around who can use it. So you could use it with a friend or a family member. Even if you've previously owned a home over 10 years ago and perhaps you've lost the property through family breakdown or financial hardship, you could be re-eligible, and there's a few streams to look up there. So I would consider Googling that National Home and Finance and Investment Corporation, just to see and make sure you're across all the elements. As always, this is a preliminary assessment. If there's anything major in the coming days or weeks, we'll certainly update you. Some of this stuff still has to get passed through Parliament, so that's important to note. I hope you found this helpful. If you'd like to discuss any of these elements, feel free to drop us a line. Thank you. Bye.